One key idea I read from one of your slides is to, invest in what keeps value versus what loses value. And I think it's fair to say that you see the strongest case for investments in the real economy and not the more intangible world. Can you explain that thought process and have you framed that into what's going on now?
Yeah, so I'm a simple man, so I call it the 90-10 model. If you look at the S&P 500 today, the intangibles, so IPs, technology, whatever, is 90% of the balance sheet. So that's wishy-washy. We believe there's a positive cash flow out of this IP, and hence we buy it. And only 10% of the economy is the real economy, tangible assets. And what's interesting about that is a couple of things. One is that it's extremely low. So it's been coming from 50-50, 40-30 over the last 60 years. So it's really collapsed into a size now where the 10% is too small. And how do I know it's too small? Because, over the last couple of months, Amazon, Microsoft, whatever, has started buying into nuclear reactors, small scale or big scale, or getting network grid. So we've met the maximum in terms of what the system, the real economy, can provide to the intangible economy. So the intangible economy has outgrown the tangible one. But the price is now that all of the systems are constrained. We don't have grids that are big enough. And some people say, Norway just did a gas line between Norway and in the UK, and it's this big. Yeah, it's not going to meet any demand net at the end of the day. So the underinvestment that we've seen in electrification and the build out of the green agenda in physical products and improvements is too small. So, put simply, the real economy is way too small to cater for electrification, green transformation, fiscal push, as we see in terms of the government taking an ever bigger role in terms of the growth total component of the economy. Regulation is a massive tax on this process. And what I'm saying simply is, and this is, don't get me wrong, this is probably the most positive message I could give anyone, that if you want to make money, if you want to, as a young student, want to sit and listen to this interview, you should go into jobs, that is part of the solution. Building out the grid network, better water, desalination of water, small nuclear reactors, medical, pharma, where you can use big data in a bigger way, and certainly most importantly in the energy sector, where I think we'll see the biggest gains coming from AI and big data. So as an investor, I'm saying, and it's been working quite well this year. I think you're referring to one of the charts I did on electrification. If you look at some of the big names in electrification, Schneider of France, Eaton of the US, and PWR, the power stock, they are up 45-50% versus a green basket, which is down 15%. And it just shows you the practicality, the real world has to fight back. So for the world to be in a better place, the 10% needs to grow to at least 20, if not 30%. And I'm not saying that the intangibles are not important and are not going to have productivity gains, but the fact is that we have reached the limit of how much the intangible can be of the total economy, one, but also if the intangibles needs to grow, they need the tangible world to be bigger. So commodities, solution on an environment, solution on less regulation, all this is going to be structurally very, very important for the next 10 years. So I'm shifting my portfolio towards all of these factors because I know it's going to compound positively. We are talking about trillions upon trillions of dollars, euros, that is going to be spent to make sure that people can switch on the light. And we have, potentially inside the next 5 years, we have times where you have power outages in Norway and Denmark. Maybe not Norway, you're self-sufficient, but certainly Germany, Denmark, France, Germany can see what we today experience on a daily basis in South Africa and other countries that have been disconnected and underinvested into their infrastructure.
But in the future, you imagine, where do you pair and look at renewable energy? Like in Norway, there's a huge debate on, offshore wind, etc. Is your mindset that we should, build it, but at the end of the day, it's going to be nuclear, and it's not history doesn't show us that we go backwards in sort of energy density and cost. So it has to be something more powerful and effective, like nuclear, etc.
I'm going to create a lot of enemies by the next 2 minutes,
go.
but it would be the first time in the modern history that evolution moves backwards if wind and solar is the solution. Is it getting cheaper? Yeah, but it still needs to be subsidized and it cannot deliver what is the base load of what the system needs. So however much renewable we do create, it cannot take care of the peak sort of demand on the system, which happens when, no, not in the Norwegian football team, that's not any good. But if Denmark played or France played or Brazil plays, more importantly, then, people in the English frame put the kettle on at halftime to get a cup of tea. They cannot take that peak. And if you look at building a utility, 15 to 20% of the total cost of utility is having the peak demand ability to supply that. You cannot do that by renewables. So there is, again, a limiting factor of how much renewable can do. It's already becoming, if you believe the EIA report, which is just out, it's really growing significantly. And it's especially growing significantly in areas that are a little bit remote and disconnected. That's where the strength of renewable is. But if we look at the density of energy, as I said, that will be the first time we move backwards. And don't forget, the density of both wind and solar sits somewhere between burning wood and burning coal. We cannot solve an ever-expanding electricity demand. The electricity demand over the last 30 years has been 2% a year, which is pretty much the real growth of the economy. Now is going to be at least 4% for the period. And if data centers and AI and computer powers continues to increase with the magnitude it's doing right now, we're going to come up very short on not only electricity but also the cost of it. And in that context, I think it's pretty important to realize that the solution lies in what it's always been, to find something that has higher energy intensity. And I make a prerogative call based on part science and part just trying to be prerogative. I've said that the marginal cost of energy inside the next 15 years will go to zero. The reason for that, of course, is something like fusion. And I sit on a small think tank in the UK, and I met with the head of the UK Commission for Nuclear and Fusion, and he said they have promised the UK government by 2032 to deliver commercial fusion energy to the grid system. It may be 3 years late, and the proponents that said it's never going to work says that they said that for the last 50 years. But here's the big kicker. The big kicker is that AI and big data makes it possible today to follow the plasma, the stability of the plasma. Every single atom inside the process of fusion energy can now be targeted. So the amount of data mining you could do, the magnets you use in fusion is really, really growing exponentially in terms of the impact of what we do. So I'm very hopeful that the end of the rainbow for all the problems we have socioeconomically, the amount of debt we have, it's not going to be that we inflate it away. I think that's a very linear thinking. I think the sort of more positive way to think about it is that the need, the scarcity of electricity, the scarcity of, being able to switch on the heating system is going to create a huge flow and inflow of capital into these investments so they get elevated. Because think about it, and this is very positive. When we had the COVID, everyone said it's going to take 3 to 4 years to get a vaccine. You can discuss whether how viable the vaccine, but we got it inside 12 months. So when the world, CERN and other sort of multi-projects, genome mapping, when the world puts their mind to it, they solve the problem ahead of them. So I'm not too nervous, and I'm pretty confident on my call on marginal cost of energy.